Hey all, welcome to Share Trek. This is Raj here. This is a very brief video just to give you an idea of what I'm thinking about when I look at the headline out here. So we have a headline here which says Trump says the Fed should cut rates to ease the economy's transition to his tariffs. Okay, now within this I think lies a whole lot of confusion that the market has got. The way I look at it is that if you raise tariffs, it's by 25% plus reciprocal tariffs on all the countries. Until the time that there is a negotiation to bring down the tariffs on both sides for the reciprocal, the inflation is going to go up. 25% in case of all those things imported from Canada, Mexico, and EU, and also from China, because there is a lot of tariffs out there. And for the rest of the countries, reciprocal tariff means if they are putting a tariff of 5% on imports from US is going to put a 5% tariff on the imports from that country. Now, all of this is inflationary. So what does the Fed do when inflation happens? Fed tries to tamp down the demand side to make sure that the prices are under control. So raising interest rate is the way the Fed controls inflation. The other way that it controls inflation is by reducing the supply of money. So the quantitative tightening is the other way by which the Fed can control interest rates. Now, what Trump is saying is that Fed should cut rates to ease the economy's transition from his tariffs. So this is like day is night and night is day. It flies against everything I understand about the theory of economics. Maybe I am less educated. Maybe there is something out there in what Trump is saying. Maybe he knows more about economics than anybody else, because we also are looking at another headline out here. So I don't know whether I should believe my understanding of economics or whether I should believe all the spin doctors and Trump who are, talking totally opposite. For example, Energy Secretary Chris Wright is saying Trump's push to produce more oil is driving down prices. Now, my understanding is that there is a price point per barrel after which the shale gas production is not profitable. It's not even break even. So all shale gas units will stop producing oil once you reach that price point. And I don't know what that price point level is at, but we can't keep on expecting that the oil price is going to keep on going down just because we say drill, baby, drill. We have to look at the price point at which oil reserves are viable to be extracted from the earth and processed. So as the oil price goes down, it starts benefiting countries like Saudi Arabia and Iran, who have got really high quality oil reserves which cost very less to extract. Whereas for countries like Canada and shale gas and oil sands, it's a very expensive proposition. So it's going to hurt US and Canada if oil prices keep on going down, and it's going to benefit Saudi Arabia and Qatar and maybe Iran and those kind of countries which have got better oil reserves. So all in all, I'm thinking that I'm totally disoriented. My understanding of economics does not line up with what Trump is saying or what Lutnick is saying or what Chris Wright is saying. So I'm going to wait and watch what is happening. And this is why I think gold is likely to become much more dominant in this market going forward. And people might end up going in for gold, or maybe some money going into euro and Japanese yen. So those kind of things are likely to happen. So friends, that's all I wanted to say. And I'd like to hear from you. What do you think? Should the Fed cut rates because of the tariffs? Because tariffs are going to push inflation up. I need to hear from you guys, because this is all very surreal. I don't understand whether I'm right or whether Trump is right or Chris Wright is right. Okay, so I look forward to your comments. Thanks and have a great day. Bye for now.